If you're a beginner or an experienced trader, understanding candlestick formation can give you an edge in the market. I will break down the most important patterns, show you how to spot them, and explain how to use them in your trading strategy. So make sure you watch until the end. So, what does this mean? Let's say this candle is one of the random candle in the 1 hour time frame. This wick means that in that 1 hour, let's say between 11 to 12, doesn't matter, the price has an increased till this level and then decreased this level, and then we push the price till here, just like this. And what happened at this area after the 1 hour has finished, maybe 30 minutes, maybe 4 hours, we are closing this candle. Also the same for the seller's candle. Also same for here. This wick also shows the price increased the most at this level and then decreased this low, and then it increased again and fell in that 1 hour, and then we close the price at this level, not this level, because this candle is a buyer's candle and this is seller's candle. And also you can find different colors that used to differentiate between bullish or bearish candlesticks, such as green or red. The filled part of the candlestick is called the real body. The thin lines poking above and below the body are called shadows. So this was for the sum up. Also, the top of the upper shadow is a high, the bottom of the lower shadow is the low. So let's say this is a 1 day candlestick. You may say this is the day low, this is the day high. So now we have understood what is candlestick and what is the tail, what it tells us. Now, okay, there's many different shapes of candle, but after this video, believe me, you will be understanding all the situation. Okay, baştan alıyoruz. Okay, now we have understood the candlesticks and what does it mean. Now we are going to be looking at a different kind of candles. Please don't make this scary for yourself, because after this video, believe me, you will be understanding all the patterns and all the candles that what meaning into the graph, right? Okay, first of all, let's start from the tails. We are seeing a hammer, right? And also reverse hammer. So what are these meaning? What do they tell us? The price increased the most at this level, and then something happened. Sellers were so dominant that price decreased until this level. So now I understand that the sellers are so dominant for the buyers. As long as the wick gets longer, which means sellers or the buyers that much into dominance for our candlestick. So also this candle, what happened? The price was very low, and then the buyers came into the market and pushed the price till this level. So now I know that now the buyers are dominant. This candlestick is also more accurate if you are looking in the bigger time frames, such as daily, 4 hour, or weekly, monthly, doesn't matter. Because in the very small time frames, like 1 minute, 5 minutes, may tell you less, but the higher the time frame will tell you the more overall general information that you are looking for. It was for a plus, it was a plus information. So now we have understood the tails of the actually shadows, right? Now we will be looking at the patterns. Bearish engulfing bar. Okay, what does it mean? We have two candles here, and we see that the second candle eats the first candle with its body. So let's keep it simple. There was a 10 buyers here, and here there's a 30 sellers. So what does it mean? Sellers are more dominant than the buyers. So I may also think that maybe there's a bearish activity in the market. So now let's give an example and try to understand how it really actually works. Okay, here's our example, and now we are going to be analyze it together. So what happens? We are in an uptrend, and then I see this candle, I see this candle. Okay, it's so easy to identify the bearish engulfing bar, but what is this and this candle mean? This candle tells me that the buyers and sellers nearly equal, but buyers are a little bit more dominant. But in the second candle, I understand that the sellers has came to market and they are way more dominant, that the second candle eats the first candle with its body. Okay, now I may see that the sellers are in control. So I can say that now the buyers are not in control anymore. The sellers are in the control. Another pattern, also engulfing bar, but this is bullish engulfing bar pattern. All the basics are the same. Everything is the same. Nothing to confuse. 10 sellers, right from your mind. 10 sellers, 50 buyers. Okay, second candle eats the first candle. I know buyers are in the control. Same example, same thing. Nothing is different. Just the colors are different. This is our another candlestick pattern. This candle tells us that buyers and the sellers are equal, which means no one is in the control. So here's our example. We were in an uptrend, and after 4 candle, the 5th candle has become Doji candle. Now the buyers are not in control. In the opposite, they are equal with sellers. And then what happens? The market reverses, and then we are making a pullback. So this is what Doji candle actually means. The dragonfly Doji pattern. Okay, this is a bullish candlestick, but how and why? Okay, here as you can see we have a very long tail, which means that the price was here, and then the buyers are coming into the market. They're pushing all the sellers till here. So I understand that the buyers are more dominant than the sellers. They are so dominant that the price has increased from here to here. As long as the tail, which means that much the buyers are in the control. So here's our example. We were in a downtrend, and after huge selling candles, I'm seeing a very strong dragonfly doji candle stick pattern. So now I know that the buyers are in the control right now. So now I can be looking for the long position options. The gravestone doji candle, the bearish one. Actually, there is nothing is different. This is the same actually, but this is opposite than the other, which means not buyers but sellers are in the control. And remember, as long as the tail, that much strong is the sellers. So let's see an example right now. Here's the example. We were in an uptrend, everything is the same. Then the sellers were more dominant here. They pushed the buyers till this level of the price, and then the price kept decreasing. So after seeing this candle, especially in a bigger time frames, I may looking for the selling options. The Morningstar candlestick pattern. The Morningstar is a bullish 3 candlestick pattern signifying a potential bottom. It warns of weakness in a downtrend that could potentially lead to a trend reversal. The bullish reversal pattern consists of first of all a long-bodied black candle, extending the curved downtrend, a short middle candle that gap down on an open, and then a long body with white candle that shows us the buyers are in it. Okay guys, here's our example. As you can see, we are in a downtrend, we are making a little pullback, it gives us an inducement and then kept decreasing. Okay, now what do I have? I have a bearish candle, I have a small bullish candle and a bullish candle. This three candle pattern I have seen and I have understood that this is a Morningstar pattern. Now, I will know that the market structure may shift to an uptrend. Now, I will be looking in the coming up week for long positions, for an example. And I would like to take your attention here. This is a daily candlesticks, right? So if you are looking at 1 hour time frame candles, it shows you 1 hour differences at that candle, which means each candle here includes 24, 1 hour and 48, for an example 30-minute time frame candle inside. So that's why if you are trading with the candlestick patterns, you need to look at the daily or 4-hour or monthly time frame candles, because it will not going to be accurate if you are trading the candlesticks in 5 minutes, 15-minute time frames. They will not going to be give you the real psychology behind of the candlesticks. So keep in mind and be careful while looking at the candlestick patterns. Evening star candlestick pattern. This pattern actually exactly the opposite pattern of the last one. What we did last time, we were looking for a buy options, and in this pattern we are going to be looking for selling options. Let's think like these three candles are meaning a day. This candle was Monday, this candle was Tuesday, and the other one was Wednesday. So we are analyzing. On Monday, the buyers were so dominant that we pushed the price till here, and on Tuesday, I'm seeing a selling. Now the sellers push the price a little bit down, and then on Wednesday, I'm seeing like nearly 50% of the increasing in the price on Monday has been pushed, right? Okay, now I know that the buyers are not in the control anymore. I might look for selling options in lower time frame candlesticks, right? Okay, let's see an example together. Okay, here's our graphic. Now let's analyze the candlesticks together. We were in an accumulation here, which means the price is always going up and down in the same range. But I am seeing one thing. The buyers are pushing the candlesticks up, as you can see. In these candles, the price was here, and what happened? The buyers pushed the price till here. This candle was bearish. There were some sellers. The price was here. Okay, but the buyers pushed the price till here. And in the other days, I'm seeing very strong bullish candles till here. Now I am seeing a big selling candle till here. Evening star pattern. I know this pattern, and I know that the price will not going up or down forever. Now I might think like, okay, now the buyers may not in control anymore, and in the lower time frames I may look and sell options. So this was the evening star pattern. Let's keep moving. Okay guys, let's give a break because I would like to tell you something before telling you the hammer pin bar candlestick pattern. You do not need to keep in mind all the candlestick patterns. Just know that we are not saying you need to know all the patterns, etc. In here actually what we are trying to do is understanding the candlestick and understanding the buyers and sellers psychology behind the candle. You do not need to read this right now. Just look at this. Just look at this and tell me what happened. The price was here and something happened. The buyers came into the market. They pushed the price till this area and kicked all the sellers. Okay, what do I have? I have a very long tail. And as long as the tail, as strong as the buyers are. I know that. So now you tell me, what is hammer pin bar candlestick pattern is basically this. Okay, let's skip to our example. Okay, here's our example. As you can see, the market was trending down. The formation of the hammer pin bar was a significant reversal pattern. The long shadow represents the high buying pressure from this point. Sellers was trying to push the market lower, but in that level, the buying power was more powerful than the selling pressure, which results in a trend reversal. The most important to understand is the psychology behind the formation of this pattern. If you can understand how and why it was created, you will be able to predict the market direction with high accuracy. We will talk about how to trade this pattern and how to filter this signal in the next chapters. Okay, now I will be moving more fast because now we have understood the candlestick and the psychology behind it. The shooting star bearish pin bar. Okay, what is it? Actually, it is the opposite candlestick pattern than the last one that we were looking at, right? So this candle now needs to mean you that the sellers are in the control, not buyers anymore. The Harami pattern. This pattern consists of two different candlesticks. The first one will be being called by mother, and the second one will be called as the baby. So let's read together. For the Harami pattern to be valid, the second candle should close outside the previous one. This candlestick is considered as a bearish reversal signal when it occurs at the top of a trend, and it is a bullish signal when it occurs at the bottom of a downtrend. So, which means it may be white and this one may be black. It is the same thing. So let's look at the example together. So in the chart, you can see how the trend direction changes after the Harami pattern formation. The first bullish Harami pattern occurred at the bottom of a downtrend. Sellers were pushing the market lower, but suddenly price starts consolidating, and this indicates that the selling power is no longer in control of the market. And the bearish is the opposite of the bullish. This one occurred at the top of an uptrend, indicating that buyers dominating is over and the beginning of a downtrend is possible. So when this pattern is created during an uptrend or a downtrend, it indicates a continuation signal with the direction of the market actually. So this one also, so it was the Harami candlestick patterns and how it was being worked. So now we are going to be doing some small workshop together to understand all the candlesticks. So now we have understood what is the bullish Harami candlestick and the other candlesticks. Now we are going to be making a small workshop for you to check yourself that how much you have understood from this video. And also it will be a small workshop and it's also going to be a little warm up for yourselves. The last candlestick pattern that we are going to be looking at in this video. So first of all, congratulations, you have watched until now. You have learned all the candlestick patterns and now you have understood the candles, at least the psychology behind it a little bit, and you're not confusing like what are these shapes and what are these tails means to you. So I will tell this so quick. Tweezer bottom, what does it mean? We are in a downtrend. You see tweezer bottom. There was a 50 sellers, it is a big candle, and then after the 50 sells we are having a 50 buys, the equal, which means the sellers had a huge breakdown but the buyers collect all the sellings in the second candle. So now it is time to make a training and try to identify all the candlesticks that I'm going to be showing you. It's going to be a small workshop and checking yourselves, right? So keep watching and try to do it by yourself. And if you stuck or something, just keep watching and don't get stressed because you are just a beginner and you are just understanding candles. It's normal to confuse, so nothing to worry about. Just watch the training that we are going to do right now and check yourself. So let's keep moving. Okay, here's our small workshop. Now we are going to be identifying all the candles and write all the names of these patterns together. So you will be checking yourselves, so try to do it by yourself. And if you are stucking at some point, just keep watching. It's alright. This is the first time that you are learning the candlesticks. It may not easy at first, but after time by time, you are going to be keeping in mind all the information that you have seen in this video. So the first one, now, as you can see, we have a selling and a buying. But how it happens? The mother and the baby, you remember? This is a bullish Harami pattern. The formation of these candlestick patterns indicates indecision in the market. In other words, the market was consolidating during this session, right? You remember? Second candle. The second candle is bullish tweezers, the last candlestick pattern that we were looking for, at. The market was trending up. The sellers tried to push the market lower, but the reaction of the buyers was more powerful, and this pattern represents the battle actually between sellers and buyers to take control of the market. At the second pattern, we are seeing an engulfing bar. The sellers were engulfed by buyers, which means you can keep it in mind like this. The second candle eats the first candle. 10 sellers, 15 buyers, you name it. The second one eats the first one. And what are we seeing at the fourth? Engulfing bar. Fifth, engulfing bar. Sixth, engulfing bar again. And lastly, what do we have? A Harami pattern. This pattern also shows us that the market enters in a consolidation phase during the session, so buyers and sellers are in an indecision period and no one knows who is going to be in the control of the market. Okay, here's our last exercise. Let's try to name these patterns together again, and after this we are going to be finishing it actually. So let's keep moving. What do we have at the first pattern? Bullish engulfing bar. What do we have at the second candle? You might keep in mind like the shape, the hammer. Okay, the hammer, cool. And what do we have at the third candle? Actually a hammer, which is the large body and also the small body, baby Harami pattern, right? So it may confuse you, but it is alright. It was a little bit specific example right now, but it is alright. And what do we have at the fourth is that it is a bullish engulfing bar. Please, I want you to open your charts after this video and do this homework over and over again, and you will see that with screen time and practice you will be able to look at your charts and understand what the candlesticks tells you about the market. So don't worry about how to enter and exit the market for the moment. Take your time and try to master candlesticks patterns. So this is the end of the video, guys. Thank you for watching. Now you have learned all the candlestick patterns and you are going to be studying for keeping in mind. I suggest you to take notes. It will help you to understand more and more while writing, in my opinion. So stay tuned for the coming up videos. We are going to be discussing another kind of strategies and some intermediate level information about the market, etc., etc. So have a nice day and please don't forget to subscribe and leave a like.